Will Snapchat stock snap back up? Because on the last trading day, we detected some unusual trades to answer this question. Now, what's also very unusual is that back on May 7th, you can see here very strong resistance here from its high that never broke above it. And on May 7th, there were unusual option activity that we had shared with our members only in this video, as you can see here. Members only, where we analyzed Snap to go short. On May 8th, we shared this to our membership. You can see the trades here. On May 7th trading day, for these August 16 options that just expired last week on Friday, 41,000 15 strike puts. And you can see that based on our analysis, these were going for at least $3.8 million, and clearly a bearish trade, which is why we told our members that we were going to short Snap. And now, after these options expired in August 16 recently, clearly very profitable trades. Because ever since those put options were placed, you can see that the stock went down 46%. So quite a drop. So if you had access to our membership, you could have either shorted Snap, or if you had long stock, you could have closed out to avoid this crash, in which you would have lost 46% in just 3 months. So that is the value of our membership. If you are interested in joining, we'll put a link at the top here where we use this type of data analysis to find out how wealthy investors are trading different stocks in the market. Because as we all know, the rich have more access to information, sometimes leaked insider information, to make better financial decisions. No wonder the rich get richer. So what is happening now with Snap? Well, let's take a look at the most recent data on the options timed in sales tape. As we can see here, 5,000 contracts being traded at the last hour on August 16 for these June 20 options, 15 strike calls. What's interesting is that previously it was the 15 strike puts, and now they're trading the calls. And you can see the price that they paid here, $72 for each of these call options. And so when we calculate the total trade cost, 5,000 times $72 per call option, this trade was $360,000. So not quite as much as the $3 million trade that we initially analyzed. And that is why this is a lower chance of profit trade in comparison to the trades that we share with our membership, because this investor did not put as much. And we know that these trades were opening trades, because if we take a look here for these June 20 options, at the 15 strike calls, 5,000 being traded, clearly opening, since there was only 3,700 contracts at the open interest. So that is why we still got into the position here, buying these. POS stands for position, green means buy. And so they bought these for $72 each. And so when we analyze this trade, the share price of Snap on the x-axis of this profit loss graph, the profit is on the y-axis. Note the zero line here, so anything below the zero is a loss. And so as the share price goes up, these call options become profitable. If it goes down, it becomes negative loss, because this is a long bullish trade. And we can confirm this with the delta that is positive here. If it was a short bearish position, it would be a negative delta. Now, there was another trade that we can see here for the November 15 options, 2,900 995 contracts being traded here. Not quite as much as the other trade, but still quite unusual. You can see that this is a spread here where they are buying the 11 strike calls and selling the 14 strike calls. And if we calculate the total trade cost of this trade, where they're buying for 62 and selling for 15, each of their trades is $47. And since there was 2,995 contracts, this trade was $140,000. So half as much as the other one here. But in total, it is still not more than $1 million. So that is why we simply followed this trade for the November 15th here. You can see 11 strike calls, our position we were buying these, opening trades over here because open interest is just 2,400, still slightly less than the number of contracts that were being traded. However, on the 14 strike calls where we were selling these, the open interest is 9,500, which means these could be closing trades. And that is why this trade is higher risk in comparison to the trades that we share on our website. And when we analyze this trade where they buy the 11 strike calls and selling the 14 strike calls for $47 each, we can also see that this is a vertical call spread. As the share price goes up, this becomes profitable. If it goes down, it becomes a negative loss. So both of these trades are going long bullish, and that is why we think there is a chance that Snap stock will snap up from here after those put options that were bearish have expired now. But keep in mind, this is a higher risk trade in comparison to the trades that we share with our membership. If you want access to the lower risk, higher probability of profit trades, then make sure to go to our website to learn how you can gain access to better trades. Let us know in the comments below, what do you think will happen to Snap? And as usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.